Hey everybody, this is Jim at freechartvideos.com using time-honored techniques to understand modern markets. I just want to remind you that this video is for educational purposes only. It is not intended to be used as any form of investment advice. I draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. I'm not a licensed professional, just a guy that draws lines on charts. So let's look at the S&P. Okay, we are looking at a 10-minute chart, and I want to show you the salient features here. This is a rising wedge that I thought we were getting a rising wedge here. It didn't really get enough touches to go where I thought it was going to go. But you can see the shape of this, and it did have a wedge shape, and it sure acted like a wedge when the markets got slammed down on the 18th. After that move, there was kind of a settling back with clear downward bias, but that broke out. Looked like it was making a small little channel here identified by these green lines. And today, we got a touch on that upper line. And then the markets sold back and broke down from that line. And when this line broke, by the way, it did so in pretty much typical fashion, where it got a bounce on that line to start with, came up, and then it really just kind of fell through that line. And that tells me, just like this line right here, that tells me that these lines are indeed significant. They are telling us something, and when they break, we should take heed and realize that at least this little trend has now broken. Additionally, the height of the move this morning, and I was looking for a move to this upper line today. We got it. It's just that it was all over and done with in about 30 minutes. And so what are we looking at here? What I think we got was all of these folks who bought back here from the 12th, say, to the 17th of August, as they were locked in after this gap down. I believe what we got was a natural rally coming back up, and then we hit what I would call gap resistance. What is gap resistance? Well, it's not so much there's this magic power to the gap that kind of mysteriously sucks the prices up into the gap like a vacuum draws in air. That's hogwash. It really is. There's no reason for a gap to be filled. There's no reason. However, they usually are, and the reason they usually are is because a gap is caused by an imbalance in trading, selling pressure, and eventually the selling pressure turns around and it's met with buying pressure. Then once that buying pressure comes up, then something very real happens, and that's either gap support or gap resistance. In this case, gap resistance. These folks have been waiting for 4 or 5 days for the markets to rebound, and once they saw that move, everybody, or not everybody, but a lot of the people who had bought the market right in here were thinking, oh, I'd finally have a chance to get out even. So what do? They get out even, and that drives things back down. So as we look at that, I will remind you that we are still above this red line, that red line being a line drawn across a number of major tops. Got to redraw that line a little bit. Here, 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 resistance here, broke, and now that line should act as support. Now, let's be honest. Then I'm going to have to move this line again. Having the support of a line that has a fairly steep downward bias really doesn't do anybody a lot of good, to be honest with you, if you're long, because you can see that in 3 days, well, we could sell down another 30, almost another 30 points. So, but the fact of the matter is, as long as the market stays above this line, then I think if we intercept this blue line down here, then that should make another bounce up. It is also possible that this pattern here is kind of a it's an odd place to be seeing it to be in all candor, but it has a head and shoulders-ish kind of a top shape to it, so we can't ignore that. I think when you see it, you have to say, well, that's kind of what I'm seeing. And it's not a particularly regular pattern either. It's hard to tell exactly where the neckline is, but let's draw it horizontally. If it's there, then I think we need to keep an eye on it, because that could be setting up a move, and it's just potential here. If this line breaks and if this red line breaks, then we could be heading back down to this line in a hurry. So just something to be aware of. I'm not sure whether this is the correct line or whether this blue line is the correct way to draw this, and this has a little bit of an odd shape to it, but it's still worth pointing out. Finally, I just want to say that, this kind of action that we're getting in the markets, we're getting a little bit of expected things happening, and then we're getting things that don't look like they quite completely pan out. And that just tells me that right now the markets are still in a state of, I don't want to say panic, but they're in a state of relative disorganization. You get these nice bull runs or nice bear runs, either way, where things kind of happen. You get a move, you get a consolidation, continuation. You get another move, then you get a continuation. We're going up and down, just kind of getting all screwed around here, and that tells me that that this is simply an area where the markets are looking for direction. And if you look at this chart, and this is the last thing I'm going to say before I show you one more thing that I think you need to take a look at. But if you look at this chart, you can kind of see that we had this steep sell-off, and now we're just kind of bounding up and down. If this is a triangle in development, and that is kind of my preliminary thesis, though we didn't make that touch on that top line, which, by the way, just for the heck of it, let's see what happens if we move things to where that is the touch and the top line was wrong. Okay, that is a possibility here, guys. What? Jim, you be wrong? Oh, yeah. Maybe there is our answer. Maybe that is the real pattern, that we break down, enter this period of congestion and consolidation. The question now, the $64,000 question, and for some people probably more on the line than that, is, does this go up or down? I will scare you with the idea that in reading about triangles, particularly the symmetrical type, which this would be, John McGee, in his excellent book Technical Analysis of Stock Trends, mentions that triangle patterns often develop as a continuation pattern during or right after panic selling from the breakdown of a topping pattern. So what he's saying is, and I'm saying we still have to look at this pattern to see what's going to happen. But what he says is, you get your top pattern. Let me bring this into focus a little better. You get your topping pattern, then you get your panic, then you get a consolidation, and then more than likely continuation. So I'm just telling you what the man said. I right now cannot tell you for sure that's what will happen, but when we start getting down close to this line down here, if we get down there, and it looks like we may be potentially seeing that happen, then I think that is that's something that you'll want to watch out for. And if that happens, let's measure the height of our triangle here, see where that would take us. Let's pretend like this breaks down in 2 days. The measured move would be to 1020. Oh, look, that goes to a line, doesn't it? Where's that line? Where does that take us back to? Got to go to a 2-day chart. That takes us back to the neckline of this big inverse head and shoulders pattern that never really got a solid back test. So kind of ominous, I know, but I feel the need to point that out. Again, if this top line and this bottom line are defining a triangle, then we are probably looking at, if it breaks down to the downside, we're looking at a minimum move to about 1020, where there should be strong support. So look, that is it for today, August 25th. I'm sticking with cash right here. To be honest with you, we're right in the middle of this sucker, and down maybe, up maybe. I don't know. I think I'm going to wait to see what this triangle does, and that'll be the next major move for me. In the meanwhile, it's good that we have avoided, at least for now, the dreaded and often feared black swan formation. So we're not quite to this level of panic yet, but this is definitely something to keep your eyes on. So for right now, my outlook, I'm going to make that bolder colors. My outlook, at least for right now, is that we are in a triangle. That triangle will either break down or up. And if it breaks down, we're looking at a move to the low 1000s. If it breaks up, then we'd be looking to a move around 1318. But you know, that doesn't seem that plausible to me, because in order to do that, we got to get over that neckline of that big topping pattern. So for me right now, I am just I've got this hunch that that this will break down. I hope I'm wrong, because it'll be a blow to the markets, and it will eventually filter through and be a blow to the economy. But you know, you got to call it the way you see it. And after that swift down move, entering in what appears to be a symmetrical triangle, that should have a natural bias towards a continuation pattern. And again, going back to what John McGee has to say about formations after panic bottoms, they have a tendency to be a continuation pattern. Look, take care. I hope you enjoyed this video, and when you get a chance, come visit me at freechartvideos.com, where I use time-honored techniques to understand modern markets. Thanks for watching.